What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And we have an emergency TA update for Kadena, KDA. The price action is getting pretty saucy at the moment with these red candles forming on the 4-hour chart. So we are going to break this down and see if we can determine some target price points and maybe when it would be a good chance to ape in if you have not jumped on to this amazing project. This, of course, is not financial advice. I'm just telling you what I think. I am a Kadena bag holder. And shout out to my good friend Jai Dillon.
Woo!
This is a special request just for you because he is thinking about jumping aboard the Kadena train, which could be moving out at any time after it takes this break. So let's get rid of my handsome face, and here we are on the 4-hour chart. So looking at the chart, as I said, we've got plenty of red candles forming here on the 4-hour as we have a definite correction. We have been waiting for a significant correction for quite some time. And of course, as you know, if you've watched any of my prior videos, I bought in way back on this side of the chart. Actually, it's off the chart because my first average purchase price of my two orders was at $1.89. And so I kept waiting after price jumped up above $2 to $3. I kept waiting for a correction that never happened because when we had this stochastic jumping down in here into the oversold zone, we did not return much of a correction, and I thought it was going to go lower, and it did not. And then the stochastic jumped up high here, but we didn't have much price movement up above on the chart here. And as you know, I always look to see what the corresponding price is with the stochastic peaks and dips in order to determine what is going to happen and what type of a trend we are in. So we had this dip down here almost into oversold zone, not too much of a price change. Then we went back up to oversold. Again, not much of a price change. This is why I thought this dip here would produce a good correction, and it didn't. Well, of course, as all of you know, we shot up to the $8 level. And then I waited again, thinking that this dip here would bring a correction down to the 200 EMA on the 4-hour chart, which it did not. And then, of course, we had this big run up where I just sat every day crying because I missed my opportunity to load up again after that first purchase. So then I thought, well, this is the significant correction. This is the real one. I started to buy. I think I got a couple more orders in during this time, but of course, price shot back up. I thought we were going to come down and touch this 50 EMA line or possibly even jump down to the 200, and it didn't happen. So then here we had this peak where we ran up to 25 bucks, and now we have the correction that I have been waiting for, where this one is really more significant than anything we have seen since the run-up. Now, looking over at the VPVR, we are sitting here below the point of control price of the visible range of the VPVR. The VPVR means volume profile visible range. So what that means is we take all of the price action on the chart that is visible, and then it puts a little bar chart over here on the side where it shows you how much volume is bought and sold at a particular price instead of at a particular time. So this is the POC, point of control, that average price. The bars down here show you the volume for each 4-hour candle or whatever slice of time that you're on, depending on the chart you're looking at, the 1 hour, the 4 hour, the 1 day. This is the total volume for each candle that is completed. So out here is the point of control and then the volume at each price. So looking at this, we can see that since we have fallen below the point of control here, we're starting to move towards this big node that is sticking out right here. Now that is what I would call a definite potential target price. This is what I'm looking at. I know that there's a good chance of us dipping down here to this price, which is approximately, say, $17. Now, again, this is not financial advice. Don't take my word for it, because we might not make it down to that price. And we're going to have to look at the one-day chart to see what the overall is looking like. The chances of getting down here to the 200 EMA is looking pretty slim. And the reason is the stochastic is already at the bottom in the oversold zone. And we see a crossover of the fast stochastic line and the slow stochastic line. The stochastic is what you call an oscillator. And that means that it is something that just moves up and down like a sine wave, like this. And that's why I look to see what the price is at stochastic peaks and compare that to the price at stochastic dips, because then you can see what kind of trend that you are in. So let's just say, take that into consideration, and looking at these peaks here, which we had a definite price rise, and then we went down to a bottom, a stochastic bottom here. But on that bottom, we only made it down here to around $18, $19. So that low is higher than the previous low from this stochastic low point that returned a price of around $7.50. That means that the overall trend is moving up because you are experiencing higher lows. All right, let's clear all of this mess out of the way here because it's hard to see. Because of the fact that we are in the oversold zone and we have a crossover where the fast line looks like it's about to overtake the slow line, that means that we might already be at the bottom of this dip. Now, that's not a guarantee. We are below the 50 EMA and momentum is definitely downward, but we're close to this volume node at the same time of being at a stochastic bottom with a crossover. So it could mean that we start to move up from this point. We could get lucky and continue downward and head for the next volume node, which could be either here at around $13 or here at around $11. That's sticking out. I don't see us ever going back down here to this node at $7.50. That's wishful thinking. Okay, so let's look at the one-day chart and see if the current trend that we are in, which this 4-hour trend is just 1/6 of the move that we're going to see on the one-day chart. So let's clear this out and jump to the one-day chart and shop and compare. This one looks a little bit more clear. I'll tell you what I mean by that. First of all, we are below the point of control price on the one-day chart, which is right at $22.23. We are at a clear downward momentum from the peak price when we tipped off up at $25. We are still well above this 50 EMA line. Now, if we extend that 50 EMA, and it will probably do something like this, okay? It's going to curve down because once we average in these prices, because the 50 EMA takes the last 50 prices, if you count out 50 time periods and then average that price, that's where you get the positioning on the 50 EMA. So this is the average of the past 50 days. So as we move here, we start to pull in this correction price, and it's going to pull this line downward. Okay, down below, let's look at the stochastic. This gives us a good indication here that maybe we will dip down to that 200 EMA on the 4-hour, because it looks here like the stochastic could complete a full cycle downward and take us down here to oversold, where we would see the price fall down towards this 50 EMA if we get a full cycle down. Now, what could happen is this could reverse and we could stay up here in the oversold zone and not come down because we're in a bull market. But if it decides to go ahead and complete a full cycle like it did here and dip to a bottom, or like it did here dipping into a bottom in the oversold zone, that means we could float downwards towards this 50 EMA line. So maybe if we're super lucky, we could revisit this $12 range right here. Okay, so if we're just extending this line like I did, it's a guesstimation. If the momentum continues downward, then maybe we could get this fire sale price of $12 where I would be selling my couch, chairs, and my kids. I'll buy them back later once I cash in for the profits. Here's the other clue that I see on this chart. The other clue is this: the volume on the regular one-day bars, okay? Notice this: the volume jumps up right here, and we have this peak. And now, what do we have? Volume is settling down. It is extremely low. While volume is extremely low and stochastic is dropping and on-balance volume is dropping, we tend to have a continuation of a falling price. All right, so that's what would support a movement of going back towards the $12 price level. Now, let's do something else here. Let me click this out, and we are going to get rid of the on-balance volume, which this is an approximation of overall accumulation or distribution. Accumulation means people piling up and holding the tokens. Distribution means getting rid of it, taking profits, and selling off. And this is supposed to tell you what the fat cats are doing, the institutional investors, the market makers, the exchanges, if they were buying more in anticipation of a price hike to increase supply and have it available for people to buy, or if they're getting rid of their bags. So we definitely see some distribution that's going on that supports the downward momentum in price. Now, let's get rid of on-balance volume. Let's go into our indicators, and we're going to jump back to MACD. That is the one of my favorite indicators that lags behind the stochastic. And look at this, guys. We have a crossover about to happen as we see that the MACD shows a very high peak. Now, when this blue line crosses over the orange, the slow oscillator, that says that momentum is going to go downward. Another thing we notice is that the bars, the volume bars on the MACD down here on the histogram, they are clearly moving downward towards the zero line, and we're very close to the point where we could be printing red bars and dipping down into the negative. This momentum also supports this price continuing downwards, possibly heading towards the 50 EMA. So like I said, if we're lucky, we can get down here and scoop up some more of these tokens at a steal of a price. But there, like I said, there's no guarantee because anything can happen. If FOMO hits and the institutions figure, hey, it's time to load up, while the price is at this level, we could see this stochastic or this oscillator jump right back up and take another run back up here into the overbought zone. So that's what we're looking at. That is the current situation with Kadena. Now, Kadena actually is how you pronounce it. Question, are you holding Kadena? Or are you waiting on the sidelines, waiting to jump in? Are you ready to ape in at the current price? I am using the DCA method, dollar cost average, where I picked up 200 of these at $1.89. I bought 10 more at $23, and I bought another 10 at $24.50 because I was thinking it wasn't going to come back down. But that's okay because I'm going to wait, and if we get this dip here towards the $12 price range, I'm going to buy another bag and pull my average down from the previous two purchases that I made. This way, I don't end up on the sidelines when the train moves out of the station and I don't get left behind. Now, I'm already loaded. I have 220, so that's great. And in my opinion, I think that Kadena will follow in the footsteps of Solana. Why? Because this is such a unique project. It is a proof of work blockchain that runs at proof of stake speeds. It also has the ability to scale like a proof of stake project. If you don't know what that means, there are some great beginner videos that explain the difference between proof of work and proof of stake. The two biggest examples of those two types of blockchains are Bitcoin, which is proof of work. That means it is not very scalable, it is very safe, and it is hard to run a ton of transactions during a very short period of time. Then you have Ethereum, which is an excellent example of proof of stake, where it can handle a lot more transactions during a short period of time. But they're having a problem with scalability. Then you have the ultimate, which is Solana, which is proof of stake, but highly scalable. So I put Kadena in a high place because it can do what Solana does, but has the safety and security of proof of work. That's about all I've got for right now. Please post your comments below and let me know what your thoughts are about the Kadena project and where you think it is going in the near future and in the long term. This is Carlton Flowers. We'll see you next time. I'm out.